All right, so let's begin the show. And today we are talking about large cap. Large cap mutual funds are those that invest at least 80% of their corpus in top 100 companies by market capitalization. Now, these companies are generally the leaders in their field of businesses, provide stable returns, and have better potential to withstand economic turmoil, suitable for less aggressive investors who want to create wealth without taking too much of risk or exposing their corpus to a lot of volatility. And so today, the fund in focus is Canara Robeco Large Cap Fund, and with me to talk on this, I have Shridatta Bhandwaldar, Head Equities, Canara Robeco Mutual Fund. Shridatta, good evening and welcome to the Money Show. And before I shoot you the questions regarding the fund, I want to understand your understanding of the market currently. We started last week. Initial days were like there was a lot of fear in the market and a lot of uncertainty, but then market obviously shrugged all of that. And today also we've seen that the markets almost in a good zone. But going ahead from now, we have the festive season, which could be a trigger. But apart from that, there are no major triggers to give a direction to the market. But how are you reading it right now at this current levels?
Good evening, Kavita. Thanks for having us on the show. The current environment is actually characterized by two things. Extremely challenging global and complex global environment. The geopolitics of Israel, uh, Gaza has actually added to it, and an environment which is domestically present where the growth, macros, and earnings is not so much of a challenge. At least as of now, we are not faced any growth moderation. And to that extent, we continue to outperform. Having said that, how we are looking at this environment is you have to look at it in terms of how the expectations have built in. Typically, if you actually step back and start thinking about how typically the global growth environment eventually has played out in Indian growth rates, the history suggests that there is a high correlation, which means if the Europe, China has slowed down and eventually US is likely to slow down, growth moderation at least at some point in time is on card. The energy prices have actually again gone back to a higher level of $90, and if with the geopolitics, it might sustain or create challenges there. And we have a political event domestically over next 2 quarters, 3 quarters. Uh, if you look at all these things, and if you look at how CYTD returns have been, how the expectation built up is in terms of the earnings estimates, which is what eventually gets reflected in stock prices. It seems that the Indian investor generally seem to be far more optimistic, and there is at the margin disregard for the global risks or macro risks or commodity side risks or even political risks, which is on horizon. So to that extent, we are a little more circumspect or cautious from near-term perspective now at this junction. Having said that, I think this growth differential between the lot of other emerging market, developed market vis-a-vis India is likely to sustain, which means through next 2, 3, 5 year, unless and until we have political establishment change, should see a business cycles, should see a credit growth cycle, should see a decent earnings growth cycle. And to that extent, while you need to be worried and you need to be circumspect about the next few quarters, given the upfronting of returns that have happened, particularly in broader market, from structural perspective, you can continue to remain kind of fairly positive on Indian market, given that the earnings growth rates in India are likely to be anywhere between 13 to 15%, even if you take a 3 year view from here on. So that's how we are looking at it. Complex environment, challenging global, fairly constructive domestic, but which seems to be more than factored in from a near-term perspective.
What about the allocation and exposure of sectors in your large cap fund?
So given the market context, we are also a little more constructive on the large cap category, which one has underperformed. The earnings growth are still relatively reasonable. They are not as good as in some of the broader market categories, but they are reasonable. And the valuations are attractive. In our portfolio, we have effectively financials, industrials, consumer discretionary, auto, part of retail jewelry, hospitals, hotels, and telecom. These as overweight sectors. Predominantly, the domestic cyclicals is the place where the earning cycle is good, and that's where portfolio is overweight on. The portfolio is underweight on energy, commodities, and at the margin IT also.
Fully invested, or are you holding up cash?
We are not typically, we don't hold more than 5% cash. I think if you look at through cycle experiences with holding cash, and already if the investor has taken that call of allocating money, we don't want to actually add the complexity by holding on to cash, because typically you tend to hold cash if you're sure about certain event which is likely to happen in a given time frame. While there are a lot of moving parts in macro and micro, I don't think you can actually pinpoint and say, okay, this is something that is likely to happen in next a month or two. And to that extent, there is no point actually holding on cash. So we are not holding much of a cash, about 4.5% cash.
Do you think it's time for active large caps to come under spotlight? And the shine on mid and small cap can go dull anytime, but the valuations are really comfortable on the large cap side. Do you agree?
Uh, yes and no, both. Basically, clearly yes from a year's perspective, given that you have the events that I suggested, you have geopolitics and you have global macro, which is growth challenged. You're better off in businesses which have basically where the expectations built up is not as high as the broader market. From that perspective, clearly yes, active large cap funds is a category that one should look at. Clearly, it will give you both the downside protection and still good participation in market. Whereas why I said no is because ultimately the earnings growth has to pan out, and there has been a little bit of earnings growth differential between the large caps and broader market, predominantly because of the construct of large cap as a category. The construct of large cap category has IT, energy, staples, and large cap financials, which have not done as well in terms of the earnings as compared to broader market in some of the pockets. But a lot of that earnings differential, as I said, has been priced in from near term perspective. So anybody who wants to go on the broader market side, mid cap, small cap, active funds, I think they should have at least 3 to 5 year view, more from a systematic investment plan to participate in the broader economy, which is the underlying for these baskets.
Also mean that it's time to increase your exposure in large cap?
We think so clearly from a next year's perspective, or given the both ways, given the, as I said, upfronting that has happened in broader market. So there is no margin of safety in terms of any earnings disappointments if they were to happen in the broader market today, given that very average mid cap, small caps, we see trading at 25, 30, 40 p, as compared to large caps, which if you take their own historical context, are trading at a fairly good valuation. So from that perspective, yes, clearly from a from a 1 year's perspective, you're probably on a risk adjusted basis, probably you're better off in categories where you have large cap as a significant proportion.
Shridatta, how can you manage your exposure in large cap when you have a multi cap in your portfolio, you have a flexi cap, and you might also want to add a separate large cap fund? Is this a good strategy?
Yes, I think a lot of time investor, and we have debated this in the past also, spend a lot more time on which category, what time frame and all, but they should spend far more time on allocation. I think it's more investor dependent. It is not, we are a manufacturer. We try to do our best in each of the category. Is the investor, his risk profile, his time horizon, his ability to take volatility, that should define which category he should have the largest allocation to. But generally, from a contextual perspective, today, large cap, flexi cap, multi cap looks like a better category where you have anywhere between 50 to 100% of large cap vis-a-vis the broader market, where you need to have stomach for volatility, which might come. You should have stomach for any disappointment in earnings, which might come. And you should have basically a horizon which is looking through next a few events which are lined up for next year or so.
Right, which is why it is a smart strategy if you're invested for a long term, so that you mitigate your risk, and also if continue in your investment, you might just have the benefit of compounding also. Thank you so much, Shridatta, for being on the show and helping our viewers with their large cap fund strategy today.
Thank you so much.
We'll take a quick break, but then post that, let's focus on insurance. Insurance for NRIs and insurance for students going abroad to study after this break. Welcome back. You're watching The Money Show with me, Kavita Thapliyal. Now, having the right kind of insurance is one of the most important aspects of financial planning. It saves you from financial loss by acting as a risk cover. Today on The Money Show, we'll analyze the right kind of life and health insurance for NRIs and also students who go abroad. What kind of insurance coverage is crucial for them? Let's get all this planned. And with me, I have Amjad Khan, Executive Director, Employee Benefit Practice and International Businesses, Anand Rathi Insurance Brokers. Amjad, good evening and welcome to the show. Let's talk about NRIs, where the regulator has also made it very lucrative for them to buy life and health insurance. So what's the current change which act as a relief for them? And also what kind of life and health insurance are we talking about for NRIs?
So hi Kavita, good evening. Yes, the regulator has brought about a lot of flexibility, and rather it's an attractive proposition today for the NRIs, especially when they have to think of buying a life insurance policy or a health insurance policy. Now let's look at it this way. Last couple of years back, the regulator along with the Ministry of Finance came up with this, that the NRI can buy a life insurance policy or a health insurance policy in India without a GST. So that means they're getting a waiver of 18%. And that's a lot of substantial amount of cost reduction whenever he's buying these kind of policies. So that's a big benefit. And I think that's an attraction point for an NRI to buy a health insurance policy or life insurance policy in India, especially when he makes the payment of the premium through his NRI account. And that's where he gets the GST waived off.
Amjad, what about the premiums? Is there any difference? Premiums are different for NRIs, and also is it country dependent, the kind of coverage that they should get?
So yes, Kavita, yes, it is absolutely country dependent since we're talking about a worldwide coverage. So if you look at the way the insurance companies divide the entire globe, is they have a US, non-US kind of a division. And within the non-US as well, you have certain countries which are a decline list. As you know, the current situation of the global country scenario where wars has become a commonplace, like Russia, Ukraine, now Israel has joined with Palestine, and all those things are catching up. So therefore, the risk profiling becomes very critical for the insurance company, and there would be certain countries which would be under the decline list of these insurance companies. As far as the pricing goes, there would be a slight increment compared to a local policy issued out in India, but the difference would not be much. It still makes for a lot of lucrative sense in terms of cost saving for the NRI to buy a life insurance policy or a health insurance policy from India.
Amjad, do NRIs need to come to India to buy a life or a health insurance? Is their physical presence a must?
Yes. So I think here there's a big catch, Kavita. What happens is the moment you apply for a life insurance policy, or for that matter, even a health insurance policy, the insurance company might want you to undergo a health checkup. So let's assume that you are in London and you want to buy a health insurance policy or a life insurance policy from India, and the insurer asks you to get a health checkup done in London. Now, trust me, the cost of that health checkup would be very, very high. But that would be a prerequisite. The insurance company is not going to bear that cost because you're in London. So in that scenario, you'll have to pay that health checkup cost out of your pocket. So the best way I would suggest for NRIs is whenever they visit India, that's the time they should take the life insurance or the health insurance policy, because whenever there is a health checkup required by the insurance companies in India, the cost is usually borne by the insurance companies.
Talking about the amount of coverage in terms of services which are offered, are there more features offered to NRI customers, or it's just same across the board?
It's more or less similar. It's just that the health insurance becomes a little more comprehensive. If you look at the health insurance proposition which is laid back to the NRI customers, that's pretty wide, right? In India, the IPD is the core coverage which you get. That means inpatient hospitalization. But if you look at the NRI portfolio, there is a provision of OPD covers as well. There is a provision of critical illness cover. There's a provision of health hazards and all those. Mental illness is that. All those things are also covered, and that makes the proposition for the NRI's health insurance very lucrative. The life insurance is more or less on the similar lines. He might have the provision of those riders like critical illness and other riders which are there in the life insurance companies at a much more expanded bandwidth than in India. In fact, the sum insured could be much higher when an NRI buys the policies, but broadly the underwriting or the policy coverage and benefit would be more or less similar. But it's just that he has the flexibility to choose more benefit and more advanced benefit under these plans.
All right, let's move on to our second aspect of health insurance, which is for students studying abroad. What packages or what kind of insurance policies are we talking about?
So students policy is a big hit. As you know, Kavita, the number of students, Indian students going out abroad for their higher studies is increasing by the year, right? The number is going drastically up. So there is a definite need for that kind of protection, especially for the Indian students studying abroad. So travel come health insurance is a combined product which most of the larger companies provide in India, like a Tata, Bajaj, or many others are there in the fray who provide these solutions. Even the likes of standalone health insurance companies also have come up with these solutions as well. Now, what does this policy do is it gives a comprehensive coverage to the students, right from covering the transit risk. When I say transit risk, that it could be delay of baggage, in fact, loss of baggage, loss of passport, all those things would be covered. Any illness or even a hijacking of the plane is covered in that. And the larger part on the health and well-being of the student abroad is it also gives you a protection against any kind of hospitalization if it happens in that foreign country. So that is the bigger cover, because that coverage there is can come up to $500,000. That is $5 lakh. That is a substantial amount, right? If you convert that into Indian rupees, it's 40 lakhs coverage. So that's the kind of coverage the student would have in those countries. Besides that, he can also add critical illness, terminal illness, and you can have accidental death benefits. You can have sponsorship coverage. You can have in case of any wrongful detainment by the police, you can have the bail bond coverage. So the features under the health come travel plan for students is very wide. So the student has to wisely choose what kind of coverage he needs, which countries he's studying in. And apart from that, it is quite cheaper. Now, let's look at it this way. If he has to buy this plan in those foreign countries, it would be very, very expensive. So that is a big advantage when he buys those policies from India.
All right. Let's talk about the premium and also the claim settlement. What would be the procedure for that?
So premium would range anywhere between 10,000 to 45,000 per annum, depending on what kind of limits the student has chosen. So it's more or less 15-20% up and down with different insurance companies. So that's the range. Coming back to the claim settlement process, the settlement process is very simple. I think they have a global support center number, which the students will have it at all point of time. In case of any such requirement where they need to get in touch with the insurance companies for a claim process, there would be a dedicated person assigned to them in that country who would help him with all the process, which includes the documentation process and the touch points within that hospital or in that area wherever he requires to submit or make the process very seemingly easy for the student. And that's how these call centers are trained and set up. So in case of such eventualities, the student has a great support in terms of filing his claim and rather processing his claim and getting the amount settled as well.
Also, are we talking about individual health policies over here, or we can also get this in covered via family floater?
So the student plan is an individual plan.
Okay. All right.
And
yeah. Which also covers the travel aspect in it.
Which also covers the travel aspect. But if we go back to your original thing, the NRI thing, there you can cover your families as well under the health plan.
Okay. Talking about student health coverage, what plans would you recommend and why?
So, Kavita, as I said, there are quite a few companies who are providing these coverages. If you look at the most prominent coverages which people have been using is from companies like Bajaj, ICICI Lombard, Tata, Care. So these are the more privileged plans which are very frequent among the student category. But as I said, there are more than 20 companies who have similar plans under the student travel plan, which includes the travel health as well as the travel risk. So you have a lot of options to select. As I said, the cost is going to be an important factor for people who are buying these plans. But at the same point of time, you have to assess the coverage and the country in which you're going to study. So all in all, a lot of options on the ground. You have to be really wise to pick up the right thing for you.
All right, I think that will be all. Thank you so much, Amjad, for being on the show and helping our viewers with various aspects of life and health insurance today.
Thank you, Kavita.
On that note, it's a wrap on the Money Show as well, but then I'm going to leave you with our WhatsApp number and email ID where we keep waiting for your questions and we get your questions answered by our experts live. So do send us your queries on our WhatsApp number 865-797-4571, email ID themoneyshow@etnow.tv. Thank you so much for watching. Goodbye.